This is the most dangerous moment in Bitcoin's entire history, and almost nobody understands how close we are to a complete disaster. For years, people were told Bitcoin is unstoppable, that no matter what happens, Bitcoin always recovers. The narrative that Bitcoin is the greatest store of value has gained traction. Right now, behind the scenes, there is a systemic threat to BTC and nobody's paying attention. And if Bitcoin drops just a few percent from where it is today, we could enter a chain reaction that could have catastrophic consequences for Bitcoin and the entire crypto space. So let me explain exactly what's happening, why this moment is so critical, and why the next few days can completely rewrite Bitcoin's future. Because once this event takes place, there will be no time to react. MicroStrategy, the backbone of the entire BTC narrative, is in free fall right now. The company is down over 40% in just 1 month. 68% below its all-time high and sitting on nearly 650,000 BTC at an average price of $74,433. And here is exactly where things start to get extremely concerning. These numbers are extremely important so that you can understand what's about to unfold. As of November 16, 2025, MicroStrategy's average purchase price for BTC was $74,433 per coin. The company has been accumulating Bitcoin since August 2020, and its total holdings stood at nearly 650,000 BTC as of November 17, 2025. Some of the recent purchases were at higher prices, including 8,000 BTC bought between November 10 and November 16, 2025, at an average price of $102,000 per coin. At current price, all it takes is another 15% drop on Bitcoin's price to take the entire position of MicroStrategy's holdings underwater. And once MicroStrategy hits that point, Michael Saylor is not holding anything anymore. The whole concept of diamond hands would fall instantly. He would indeed be forced to start a liquidation process of his positions. He is then forced into action because the system triggers automatic mechanisms to protect creditors. Forced selling, liquidation pressure, collateral deterioration, and a feedback loop that sends Bitcoin to even lower levels. People need to understand MicroStrategy has become a structural pillar that's keeping up Bitcoin's narrative, has become the whole foundation of the entire Bitcoin propaganda. And right now we can see multiple cracks that are taking over that structural pillars. The corporate sharks are certainly Michael Saylor. They can already smell the blood on the streets. In fact, they are getting ready to drag MicroStrategy into a full death spiral. And what a coincidence, JP Morgan is already raising serious red flags about MicroStrategy. Check this out. JP Morgan flags MSTR delisting risk, what it means for investors. MicroStrategy risks exclusion from major equity indexes, potentially triggering a cascade of forced selling that could drain nearly $9 million in passive fund holdings. So here is what JP Morgan really means. Shareholders are the first ones to get completely smashed, because equity is at the bottom of the capital structure. If liabilities exceed assets, MSTR could collapse instantly. Retail gets wiped out, and those convertible notes can't be converted anymore. Shareholders becomes the buffer that absorbs most of the impact. Next, the creditors join the party, and these are the ones with real leverage. If MicroStrategy becomes insolvent, creditors can demand immediate repayments. They can force a restructuring or push the company into Chapter 11. And yes, in the case of bankruptcy, the Bitcoin treasury becomes part of the process. Creditors simply don't care about diamond hands. Creditors care about getting paid. That means tens of thousands of BTC can be dumped into the market through court-ordered liquidations. Fire sale prices, actions, and every time Bitcoin drops, it triggers more selling across the system. And here is the worst part. MicroStrategy has become the foundation of the entire Bitcoin narrative. If MicroStrategy falls apart, BTC loses its largest corporate buyer. The bullish narrative gets completely destroyed and BTC might never recover. For years, MicroStrategy's risky moves only worked out because Bitcoin was continuously moving up. The cycle was very simple. They issued shares, bought more BTC, caused the price to increase, and repeated the cycle. And that created a narrative of a perpetual bull run. But right now, that loop is completely destroyed. There is less active participants, less order books, and liquidity is extremely low. And now we enter the part that 99% of people are completely missing out. MSCI, one of the largest index providers on the planet, is considering to remove companies that hold more than 50% of their assets in digital assets. MicroStrategy is at the top of that list. And if they get removed, the entire passive investing industry is forced to sell their shares. They simply won't have a choice. JP Morgan estimates the forced selling could reach $2.8 billion from MSCI alone, and $8.8 billion if other index providers follow the same pattern. That's almost $10 billion in automatic selling pressure. This event alone can send Bitcoin instantly to prices we have not seen in ages. And you need to understand this clearly. We are not talking about a hypothetical scenario or just a prediction. This is a scheduled decision that will take place on January 15. The clock is ticking. We are just 2 months away. BlackRock just recorded the largest one-day outflow since it has launched, accounting for $523 million in selling pressure. And here's the problem. The average ETF buyer has an average purchasing price of $90,000. Meaning almost everyone that took Saylor's advice is now completely underwater, emotionally exhausted, and running out of cash. And what happens when retail investors are exhausted? They add more selling pressure to the chart. And this is exactly what we are witnessing right now. 5 straight days of net outflows, momentum has completely vanished, and the cycle is in danger. The inflows that pushed BTC to $126,000 have not returned at all. And without inflows, Bitcoin has no gasoline. Now let me show you the most concerning chart. The number of wallets holding more than 1,000 BTC is decreasing exponentially. In other words, the big financial institutions, the big whales, are massively offloading their Bitcoin. On the contrary, the number of wallets holding less than 1 BTC, in other words, people that are only holding Satoshis, a fraction of BTC, is increasing exponentially. Smart money is exiting their positions, while retail keeps buying the top thanks to MicroStrategy propaganda machine. And right now, Bitcoin is acting more like a macro asset. That means that it's maturing, and people think that's a good thing. Even volatility, which used to play a pivotal role on Bitcoin's price appreciation, is decreasing exponentially. Let me explain. Bitcoin's realized volatility across all major time frames, from monthly charts to yearly chart, has stabilized near 45 to 50%. Bitcoin is no longer behaving like a high-growth asymmetrical asset. It's behaving like a slow-heavy institutional instrument. It has become more like a macro asset. Yet most people dangerously believe that this is a good thing for Bitcoin. Let me explain. When volatility collapses, so does momentum. And when momentum collapses, so does speculation. And here's the issue. Bitcoin does not survive without speculation. Because right now, Bitcoin operates 100% against Satoshi's initial vision, a peer-to-peer electronic cash system. In fact, unlike other cryptocurrencies like XRP that can act as a bridge currency, there is no inherent utility tied to BTC. That means its value relies much more on speculation than any utility sort of purpose. For BTC, speculation is what drives liquidity, and liquidity has vanished from the charts a long time ago. And right now, if Bitcoin drops just a small percentage lower, which it always does, MicroStrategy goes underwater. And at that point, the entire market is exposed. You are looking at this type of chain reaction that can have catastrophic consequences for the entire Bitcoin community. That would trigger forced liquidations across the board and push index funds to dump billions of dollars worth of BTC on the open markets. I'm not telling you this to generate fear. I'm actually pointing out towards the factual information. You be the judge. This is not a financial advice. You need to do your own research. This is the most dangerous setup Bitcoin has ever faced. and the next 2 months can decide everything for the coming years. Once the chain reaction starts, it will be too late to take any actions. Don't ignore what's happening behind the scenes, don't listen to mainstream propaganda, and learn to think for yourself. Let me know in the comments if you are bullish or bearish on the Bitcoin narrative, and I'm gonna see you in the next video. Thank you, everyone.